Okay, so here's, if this works, right, here we go. Here, for example, is a trade setup that it's kind of a good trade setup, and it's kind of not. But anyway, it's a trade I made money on, so I'm quite happy with it. So this is a trade I actually ended up taking, and I caught this trade there from there to about there. Okay. So that was, as far as I'm concerned, that was a good trade.
Yeah,
now, what's interesting about that, for a number of things, is this is the pound dollar, okay, and it's the 30-minute candle. All right, and that's, 30-minute is less noisy, and you can be more calm about taking a trade like that. And what's also interesting about it is that the time when all of those kicked off down here was on the 7:30 candle, which means it closed at 8 o'clock. So that 8 o'clock there is the UK London market open. And the volume, as you can see here, the volumes are all light through here, and then they suddenly spike up here. Yeah, and they're beginning to build there. And there's volume here overnight there.
The moment they spike, it's gone already.
Sorry?
The moment they spike, it's gone already for me.
It's gone, that's right.
It's gone.
It's building here, Talat. Look, it's building. It's higher than that level. It's got a bit more coming into it there. Now, my indicators are going to say, right, we're ready to go. We're ready to go. We're ready to go. We're ready to go. This one here, the bull bear butterfly line, is above the zero line. It's close to the green line. We're all ready to go. Okay, so I got all that lot there. I got the setup there with these alerts kicking off, and I set that trade, and off it went. So I was very happy. Yeah.
Yeah. 0.9% of the money.
And 0.9. That's right. My stop was about there.
So you put your stop loss first and see how much it costs. Then based on that, you put your lot size.
Yeah. You have your entry price here. You have your stop price here. You know what that is in pips, so you can work out what your lot size is, and then you can just trade for that.
So you had about a 25 pip stop loss, trading loss?
I think less than that. I think it was about 10 pips. That's 1.2513, that's 1.2503, so about 10 pips.
Okay, do you have a preference as to how much your trading losses or stop losses?
No, it depends on the asset.
Any general rules you follow?
Generally speaking, I also put on the chart as the ATR 10, and that says here it's 17.
So you multiply it by 1,000. So
that 0.0017 is in the same value as the pips here, 1.2503. All right, so 17 is 17 pips.
So the last digit number is just micro pip. It's not pip.
That's
because
right. But this is the very micro pip is after the 17. So on here, the 1.2503 are pips, and the 0 is a fraction of a pip.
Is a fraction of a, because in the Japanese candle it's supposed to be 2 only or 3. When you use US Japanese,
they describe it differently.
Only.
That's correct. They describe it differently. Okay, but on the pound dollar, this is how it's described.
Okay. Yes.
Yeah, and And for me, that was a great trade because it was in the beginning of the day, in the morning. What I'm looking to do is catch the opening momentum, you know, while everybody comes in and jumps on it and starts to move the market.
Yeah. Just to highlight one thing, the ATR, the ATR now it's 17, but at the point when it was the small candlestick before it break out, what was the ATR at that moment?
That ATR was
yeah.
bigger right here at the time. The ATR was smaller, so the ATR would be a lot smaller value. It looks like Neil's managed to join us as well.
So you put your stop loss based on the small ATR or just the previous day ATR? Because in the book you mentioned that you have some sort of a range. So you take the maximum of the previous day and the minimum of the previous day, and based on it you put your stop loss?
Good question. For this particular trade, what I'm interested in is the ATR on this time frame.
Okay.
Okay, so I am interested in the ATR for the day because the ATR for the day gives you an idea about how far it might move altogether in the day. All right, so this is about room for the trade, and that's that's another complete subject really. But this part is about the ATR for this time frame, which gives you the average true range for what's going on now. And you're quite right, when you move into this, the ATR through this period here, in there, is likely to be somewhat smaller until it bashes out like that. And I can't remember what it was, but it probably something like 10 or 12 pips at that time. So my starting stop was there. I think I shoved a trailing stop on this one. And if I can't remember, I haven't got the log in front of me. But at that point there, the two strategies I do with this. One is I take the alert, and the alert gives me various targets like T1, T2, T3, T4, T5. And if I'm feeling aggressive, I'll put T5 as my target, put my stop on it, put my entry. So I've got an entry price, got my stop, put my T5. My T5 is, let's say, somewhere around there. Okay. And I'll put my target 5 and then I'll just leave it and go away. Other things I might do is not put the T5 on it and put the trade on and put the trail on of the same distance that I started with that stop. So I'll refer to the stop that the alert's given me and I'll take that. Yeah?
Yeah.
May I ask, please?
Yes, of course.
I hear that. Question: you obviously went in at M30 on this.
Yeah.
My question is: you see the opportunity on M30. You wait for the second candle. You got your starting point. But did you do a trade on M1 to get it accurate, or did you just go to M30 and go, "What the heck? I'll just take it on this"?
When I trade like this, I always trade just the M30.
So when I look at the M1 for the time frame, obviously relating to the M30, I can see obviously volatility compared to that. So I'm just wondering, obviously, what would you be considering at that moment? Is you're not going to worry about that? You just go for the moment?
I don't zoom in at a smaller time frame. I know a lot of people do. They go down to something like the 5 minute or whatever. I take my trade alert and I put it on the basis of that. I look up the setup and I don't go down to a smaller time frame. And I find for the most part that works pretty well. There are times when it might have been better to go to a smaller time frame, but in practice I find for the most part I don't need to.
Acknowledge. Okay.
Why you didn't take the trade in 5:30? Because the all indicators come up, the butterfly one is up, everything looks nice.
Sorry, Talat, can you say that again?
Yeah, why you didn't take the trade at 5:30? Because all the indicators indicating up.
Yeah, good question. Really brilliant. Brilliant question. Like it. Very good. That's excellent question. Okay, I'll tell you why.
I agree. It's not the favorite time of the day, but
Yeah,
it's
there you are.
excellent trading setting.
There you are. There's a number of reasons. One is it's not a great time of day, and you're quite right about that. Now you are right as well. Look, we've got this popping up. I mean, they're all saying we're good to go.
Yeah.
Yeah, all good to go, and that is up at the top there near the green line. Good to go, no
Exactly.
question. Yeah, supreme. Now this particular my software gives a trade alert that basically will flag that up if you set it up to track these conditions. Okay, so if it had triggered that trade alert, which it probably did, what it will then do is say get in on a buy stop order. All right, so the premise is we've got momentum, and that candle looks like a really strong momentum candle, no question about that. Yeah, so the premise is we've got momentum. Now the question is, will it follow through?
Yeah.
Okay, and so the trade alert will come up with a buy stop order. It will say buy it if it breaks above this level. Now this level is slightly above the close of the candle, so it needs to be a bull candle if you set it up that way, or you can say I don't care about whether it is or not. But if it's a bull candle and whatever, you set up all the settings so that it says, right, this is what I'm interested in. Then it will say, give me a trade entry for a tiny bit above where the close was, where I got this alert. Because if the momentum follows through, and the proposition is that it will, then I want to get in the trade. However, if this is wrong, and it's not going up, actually, after all, then I don't want to get in the trade. Okay, so on this candle, going to this one, on this candle, the trade entry was, see there's the close, the trade entry was here somewhere. So if it all it had done was go that way, you would not be in the trade. So you get in the trade because it's a buy stop order at that level. So if it starts to go that way, you're in. If it doesn't, you're not. So going back to this question, which you absolutely brilliant question. There's the close. So my entry would be about there. And my stop would be I don't know, somewhere here, perhaps. Okay. And at this point here, this candle, all it did was go down. So you didn't get in on the trade at all. No trade.
Yeah.
So everything was set up, it all looked fabulous, it all looked great, but no trade because the alerts have said don't do it.
I just realised something about the trade there. You actually didn't set it up on the new order that has an instantaneous buy point. You made your own point at which you buy.
The trade alert,
is that correct?
Yeah, the trade alert says it's a buy order at a certain level. So if it doesn't hit that level, you don't buy it. Okay.
Yep, got it. Of course. Yep.
So it's just a trade suggestion. Of course, you can discount all of these. You can just say, I don't care, it's not hit that level, I'll do it. Okay,
that
that's
totally solves
completely
the problem for me.
that's completely valid response, whatever. Because all I'm doing is creating trading alerts that says here's a trade suggestion.
Really appreciate that. That's helped me solve a problem I was having. So yep, that's great.
It's always down to you at the end of the day whether you take the trade. All it's doing is giving you the trade suggestions and trying to give you the probabilities. So there you go. So if it, I mean, this one here is saying get in if it goes above there. It didn't. That's that. This one here says get in if you get above there. It did. That's that. Yeah. The other interesting thing about this is I've got these lines on here. I call them the Darvas lines, Kato Darvas lines. I've written some code that basically finds support and resistance levels, fairly straightforward sort of stuff. But what it does, it gives you an idea about which way things are moving. So here we've got a break through the Darvas support line there. And you'll find that this is like breakout trading, momentum through a support. Now sometimes it will go up and try and hit, like this line's got one there. This one ends up nearly getting to that point. So the price was going up strongly, then just rejected and then started coming back down again, yeah?
Mm-hmm.
So these lines here are quite interesting support and resistance lines. So we hit, this extends out to there, and finally we get up a new low there, and then later we get a new high there. So now this area defines our trading range for the multiple sets of candles. Okay, which is different from the average trading range, but it tells us where we are, where it's ranging at the moment. And then quite interestingly, this gets set up as a new low. And that is a higher low than this one, which gives us perhaps a little bit more before, and not this candle, because this candle, that low's still there. But by the time we get round to this candle, this low's here. So now we've got a higher low, which gives us perhaps a bit more belief that the movement might be going back up again. And what supports that as well is the fact that that's the zero line on the bull bear butterfly. So the bull bear butterfly line, this blue one, is above zero, close to the +9, and +9 is approximately the level at which we've got a follow through in terms of trend. Okay.
Mm-hmm.
So the reason why I felt more comfortable taking that trade was because of the time of day, because of the increasing volumes, because of the way it's set up, because of the bull butterfly, because we've got all these alerts now, all the ducks in a row saying we're going up. So there we are, we're at this level here, which without the indicators you might be hard pushed to believe it's going up. But with the indicators you go, okay, I get that. And I've got this here with a new higher low, which basically that is now our new support level. There's a potential turnaround. And if you look at the structure of this, you've got something like this going on, okay? And then the potential to blow through that line there. But by taking the trade alert, you get in on the trade a little bit earlier with a tighter stop, which means you can trade with a bigger size, with a bigger lot size. Which means that, you know, when you go up, you break through that lot, you get up here, the reward you've got is what, on that particular trade, probably something like 3 to 1, maybe a bit more, who knows. Fabulous trade. You only need one trade like that in a week. Okay, if that's 0.9% in there. Yeah. So that risk is 0.9%. That one trade, if it gives you 3 times as much, let's say, or at that level there, more, you're talking about nearly 3% off that one trade. If you're not greedy, you've just done for the week.
Yeah.
Yeah? Job done. Got my 3% for the week. You know, my goal, going back to what we were talking about goals earlier, setting goals and your intentions. If your goal is to make 1% a week, which some people say is not much, but let's face it, in the bank you can get 1% in a year.
Yeah.
Yeah? And 1% a week compounded works out around 70% a year. So that one trade, you know, job done. I've done one trade, that's it. I don't need to do anything else now this week.
Sounds good to me.
Okay, so that's anyway.
I
That's my
need
mindset on
3%.
it. Sorry to that.
I need 3% at least per week.
Yeah. Well, start small. Start careful. Right? Don't
Yeah.
go over trading. Just be gentle with yourself. Yeah. Don't give yourself any stress, mate. It just be gentle with yourself. Be calm.
Yeah.
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 And get a feel for it. Get an understanding. And yeah, that's all I can say is don't push yourself too hard. If it's like anything else, if you push yourself too hard, you'll end up making mistakes. If you take it nice and easy and gentle, get the feel, get the learning.
Yeah.
Okay. So guys, I've just noticed on the clock we've done quite a lot of time. So I hope you don't mind. I'm planning to cut this webinar short, but I will start another one up where this one left off if you're interested.
This has been great for me. I've really appreciated, John. I absolutely love this.
Thank you.
Gold to me. The medical preparation, really, really, totally. How many times I've been on seminars, and that's such an obvious thing. I've not actually done this with this related project. Absolutely clear. Really appreciate it.
Okay.
Great. You're a superstar. Thank you very much for your time today, John. Awesome, as always.
Okay. So that's a pleasure. And I'll set up another webinar, which basically the same kind of stuff, but I'll carry on through it. I know Neil had questions, some of which I may have answered. I don't know, but certainly I've answered. I think I've answered quite a number of questions today, but I'll carry on answering the rest of them on another webinar. Yeah. And in terms of getting the software, the release will be towards the end of this month. So I'll let you know about that. Okay.
Is it possible to have before that as much as you can? As much as you can. At least to play with him in the
I'll let you know as soon as I got the new release coming out.
Thank you very much for your time. Thank you.
All right, sure thing. Okay, so I'm going to wish you well and wish you good night and happy trading.
Thank you. Good night.
Good night.